Good day, everybody. This is Emmanuel Eliason, your CFP, coming to you today for another edition of Financial Breakthrough Academy. I trust you're having an awesome week. It's a privilege to spend some time and share some information, some nuggets in the area of financial education. It's our passion here on this channel to share, to educate, to encourage, to enable you to get some insight into some of the key elements of financial topics that may be of value to your business, to your family, maybe to your ministry if you're in ministry, to any aspect of your life, no matter what stage you are in your wealth creation journey. And it's an honor for us to walk together on this journey, to learn and to educate ourselves in the process of being financial literate in this season. Again, it's my honor to be with you today, and we'll be getting started in a moment, dissecting a very important topic that may be dear to most of us, especially in this moment. Before we get any further, just want to read a quick disclosure that the information that we present here does not constitute the rendering of personalized investment advice, but is limited to the dissemination of general information and education on various financial topics. Professional advisor should be consulted before implementing any of the ideas discussed. Again, the whole concept and reason for this is to be able to let you know that you would need to work with a professional, a CFP, a CPA, a financial professional, an attorney, somebody that can help you navigate the implementation of any of the concepts and ideas that we discuss on this channel. So again, our goal is to provide education, information that will help you in your application. So seek the necessary professional counsel as you implement these ideas. So today we'll be discussing how to prepare for the tax filing season. This is just around the time when all of us are preparing for our tax filing. It could be personal taxes you're preparing for. It could be maybe business taxes. It could be for a corporation, a non-profit, a church, whatever the organizational, maybe just for your personal individual tax filing. And there are some thoughts and ideas we want to present to you that we believe can be helpful in preparing for this year's tax filing. Now, we love to share some basic biblical concept and thoughts on the topics that we discussed. So today we are going to reference a scripture from Mark 12:17 that says that Jesus said to them, "Give back to Caesar what is Caesar's, and to God what is God's." And most of us know when we come to taxes, we have the government involved in that process. And interesting to know that back in those days, Jesus Christ actually make a reference to that scripture. So for those of us that have that inclination, I think it's a nice little scripture that should encourage most of us. Okay, now there is also a reference, a quote by Chris Rock. He says, "You don't pay taxes, they take taxes." Anyway, forever grain of salt it may be for you. Oh, how funny! It is a comedian, so I'm sure he's having some fun with that. But anyway, yeah, we pay some taxes. Whatever is due, we pay our fair share. The idea is to be able to plan effectively, so you pay your fair share, no more than what you are required by law to pay. Okay, so that's our quote and our scripture for the day. But let's, sometimes some people may have specific question about the topic we discuss. We may not be dealing with all the aspect of the topic here. So if for any reason you need to get some more clarification, you want some personalized opportunity to talk to us, we will provide a complimentary discovery call. You just text your name 720-575-1505, and one of our team members will reach out to you to provide any answers maybe address some specific questions we may have be touched on the topic during the broadcast. So please note the number, and you can reach out to us. We'll be happy to have a complimentary discovery call. In other words, there will be no cost to that particular session. So as we begin, first of all, we want to know that for this season of taxes, the deadline for filing has been put up at April 18th, 2022 for last year's taxes, 2021 taxes. So that is the general, for most people, that will be the date individual taxes must be due. If you're in Maine and Massachusetts, I think there is some kind of holiday there, patriotic holiday or something, that is being pushed off one day later on the 19th. But otherwise, for most of us, for majority of us, the period, the deadline for filing our taxes, just in case you're not aware, it's not the 15th of April as usually it is. This year is on the 18th of April will be the deadline set by the government for filing taxes. So just take note of that as you plan for the season for your tax filing. Now, there'll be quite a few, important tax changes that occurred, through the law that were passed, took effect. Most of them, earlier this year. So we just want to touch on a few of them. That, of course, it's not an exhaustive list of what we'll be discussing, but some that you can take note of right away and be able to, may perhaps incorporate in your planning going through the rest of the year, or maybe just taking note of it whilst you are preparing for filing your taxes this year. So let's discuss some of the few changes that has taken place. Some key notes again for filing our taxes this year. The date to begin, the start date for tax filing is set for January the 24th. So that's pretty close, somewhere next week, as the time you listen or having this presentation here. So take note of that. For those who are early filers, that's the start date for it. Now, there are some potential delays in refund that the IRS may be experiencing. So if we file our taxes and there is some refund due, please note that according to the IRS, there may be potential refund delays that may take place because of, again, the pandemic that we all have been going through over the last couple of years. Some is also attributed to budget cuts. In fact, some unprocessed 2021 returns that the IRS is also working on. So that's an important factor to consider. If there is a refund that is due, there may potentially be a delay in receiving that check. Now, there is a recommendation. I think for some time it's been something that has been talked about for most people, but the IRS recommend using online resources over phone for help in any necessary situation. So that's something to note as well. There's also recommendation for direct deposit for filing for returns. If there's a return that we can expect, having direct deposit may be much more helpful in that scenario. Now, here are some key steps that must be taken, I think, to help prepare for the tax filing, to make it as smooth as possible. It's never a straightforward process. Could be a lot of moving parts, but just these few steps, I think, can go a long way for us. The first is to gather all records. Again, W-2s, your 1099s, anywhere that your income sources that you worked or were in business. If you're a business owner, of course, you may have to put a P&L together, just starting to gather all your information that will be going on to the various sections of your tax filing, so that your accountant or your tax preparer will have the necessary information. So I think it's important. It's easy to misplace or forget some data points. So starting to gather that information together will be an important step that we can take in preparing for the tax filing. Now, because of the refund situation for some people, whereby we may have qualified to receive the tax credit for the child tax credit during the past year, it may be necessary to check the irs.org website to see what the status of how much you receive in terms of the child tax credit over the year. I think statements may have been already sent out for those who have kids within a certain age range. There was some specific return funds that were advanced. Okay, there were payments advanced for the child tax credit for the year 2021 that the government decided to start paying it out in advance, again because of the pandemic. So if you didn't receive your statement in the mail for whatever reason, you may be able to retrieve that information on the irs.org website. So that's something to consider. In actual fact, that should be a .com, because IRS website is .com, not a .org one. There's a typo there. So anyway, you just can go there and get it. And also having the file, electronically submitted to request the deposit will also be helpful in that respect. Again, the website should be the IRS.gov, the Gov website, not the org. Okay, now with that said, let's look at a few other key elements here that might have gone through some changes, again because of the law that was passed. I mean, the changes are quite a lot, extensive, I would say, but just some key areas that we can note for ourselves is a few of them I have on the screen there. There's some changes in the area of the income tax brackets in terms of what our taxes will be based on our income, the range that falls, the standard deductions that we are also eligible to receive, the retirement income calculation amounts has been some changes to it. Estate and gift tax exclusions have also been updated, and some figures on Social Security has also taken place. So these are some key elements. Again, it's not the whole list, not a comprehensive list, but just a few areas that we want to take note of when it comes to those changes. So let's look at a few of them in a little bit more detail. So for example, the income tax brackets, of course, the tax brackets, the current one that has been put in place is what we see now on the screen, ranging from 10% all the way to 37%. Now, of course, it depends on what our income is, our taxable income is, whether we are single or we are filing jointly as a married couple. So if you look in the detail there, you can see based on your specific income range, you see what income tax rate that you are required to be expected to be paying. Okay, whether you're single or jointly married and filing jointly. Now, for example, if somebody were earning, say, a single person earning, say, $50,000, that person taxable income will be, based on the table there, 22%. And let's say if it's a couple and they are filing jointly, again based on their income level, let's say they're earning, let's say, $80,000, and they are a couple who are filing jointly, then the tax rate for that couple will be at 12%, based on the table that has been provided for us. Now, couples that are filing separately, and also those who are head of household, that their rates as shown there. Again, the tax rate's still from 10% all the way through to 37%, but depending on the specific amount, we can see that. So again, as an example, depending on the situation, we can be able to see which one to reference to. Okay, now we have other ones in terms of this. For example, the standard deduction has also changed. Standard deduction has changed a bit. We have situation where now our deduction for married filing jointly is about $25,900, and then we also have if you marry filing separately, the standard deduction is at $12,950, and head of household is at $19,400. So again, these are they help us determine whether we should itemize when we're filing, or we can just take the standard deduction, and based on the income level and all that, it will come out one option may be better than the other. Most people may find that the standard deduction, using the standard deduction, is much more, I would say, beneficial when it comes to getting the best out of their tax calculation and tax refund and tax due. So that's another area to look at in terms of the changes that has taken place. Now we also have some changes that has taken place with retirement contributions. Now of course there are different types of retirement accounts, but most of us we may be in one of two or three of these areas when it comes to what type of retirement accounts that our employer provides. Is that right? So if you say it's a 401k at work that your employer is providing, or a 403b is similar to 401k, just that it's mostly given by non-profit organizations like churches and other organizations that operate on a non-profit basis. Now the limit there has been set to the current year $20,500. So we can all contribute if you work in a place where there is a employer provider retirement package like a 401k or 403b. As an example, you can contribute up to the $20,500 into the account. Remember, it's always better to start early. I know that the idea of putting money away, saving for the future, investing for our retirement is something that it takes some discipline. All right. So one strategy would be to, if again your employer provides it, make sure you enroll, take opportunity, especially if they are providing with the match, where the employer has a matching contribution. Is that right? I often meet clients or prospects where they ask, well, my employer provides but I don't participate. Well, the idea is that if the employer is providing it, then in they are matching at the bare minimum, we do encourage that you take advantage, because if they are matching you with the contribution you are putting into a certain percentage, then you are benefiting by at least contributing to the percentage that they match you dollar for dollar. That could be a good way to generate extra resources for yourself, so you don't leave money on the table. Now there are other strategies you can look at and make sure you're maximizing the opportunity for your retirement. Of course, it's not the only vehicle. There are other efficient ways, other ways you can especially if you're looking for tax-free vehicles and all that. But for an employer provider plan, it's always a good idea to at least make a contribution to the level to which, or the percentage that the employer will match you, or dollar for dollar on that. Okay. And then of course, if we are 50 years and above, there's what they call the catch-up contribution that the government will allow us to make an extra contribution into our account, and that is set to $6,500 in the current year. So if you combine both numbers, then we could easily contribute up to like $27,000 if we are 50 years and over into an employer provided plan. But even if you're not 50 years old yet, for opportunity to make that contribution with good discipline, we could easily make our way closer to our retirement goal, our income for retirement goal. Is that right? So that's the first category. The second one is with the IRA, individual retirement arrangement, that is also a form of retirement account that we can also contribute to. Now that is set at 6,000 with a catch-up contribution. In other words, if we are 50 years and above, we can make an extra $1,000 contribution into it. Okay, so again, this is just a high level in terms of what we can do in the contribution. There are other restrictions, but we're not going into too much details with how much you are required. You can, based on your income level, in what is deductible, it's not deductible, and all the other things. So anyway, for most of us who are still in our prime working years, 40s and early 50s, and just our income stream within the reasonable range, we should be able to qualify for these contributions and be able to deduct them from our taxes when it comes to making those contributions. Is that right? So anyway, that's the retirement contribution limits, the new ones. Again, it's not an exhaustive list. It's just pointing out a couple of them that most of us may be familiar with, provided to us by our employers and in our workplaces. Or if you're a business owner that you're setting up your own, there are options that you can do like that. SEP IRAs and some other vehicles that has been provided for self-employed people. All right. So anyway, that's for the retirement income contribution limits that have been set up now. Now there is also estate and gift tax exclusion, the limits that have changed. For many of us don't know, but because perhaps we are not in a position to do that, but there is that part of the code that allows any individual to be able to give up to a certain amount every year. And in the current year, it's $16,000. You can gift $16,000 to anybody anywhere without having to pay any gift tax. Basically, that we call it an exclusion, gift tax exclusion, whereby you are allowed to give away that amount to any individual. So if you have, say, 10 siblings and you're well off enough, and you want to be a blessing to them, you can write a check for $16,000 to each one of them for a total of $160,000. Now, in fact, if you're a couple, you can both together give a joint gift and be able to give a total of $32,000 to one individual. Okay, so it's a nice way to start a gifting program when you have the privilege of being blessed to the point where you can make that contribution, a gift to somebody, a friend or a family member or something like that. Anyway, hopefully, at some point, all of us desire to be at a point where we can do that, and that part of the code will allow you to do that and be able to take advantage of the code that way. And there's the estate tax exemption, which most of us will never ever have to worry about that or deal with that, whereby if your estate, in other words, if you pass away and your how much your total worth is after all the calculations is done. If it were to exceed this, you can take away that exemption, and then you pay the income tax on whatever, the estate tax, not income tax, and estate tax of whatever is in excess of that amount. So again, it may not be a situation that we will have to deal with, is that right? But hopefully, as we move into that level of income and affluence, we can plan around, how do I make sure that my estate does not get taxed excessively. There are ways to start planning towards that, so you can minimize the estate tax that is potentially due. But again, majority of us will never have to worry about that. Now, for those that are in a position, or they come to a place where they may be still exposed to that, the estate and gift tax rate is at 40%. So anyway, it seems a hefty rate of tax, but yeah, that's why planning is important. That's why it behooves us to start a planning process, so we can be able to mitigate, make use of the tools available, the various code, and all that is in there, so we can plan effectively towards the time if we ever need it. The last element is some Social Security figures that has also changed. Basically, the maximum taxable income base is now set at $147,000. The amount needed to earn one credit is $1,510. Every year you can earn a maximum of 4 credits. When you work, a certain portion of it is credit to you to be able to be used for your Social Security, income taxes, and ultimately what you're going to perhaps earn from Social Security benefits when you retire. And the maximum set this year is for 4 credit is $6,040 of income we have to earn to be able to get a whole 4 credits. So otherwise, that these little pieces of the code that has changed and updated some of the things that we can take into consideration. But otherwise, again, if you need some more information, you want to maybe start planning well for the future to minimize your tax liability, take advantage of the opportunity to plan ahead, again, just reach out to us on this platform, or just in text 720-575-1505. Just text your name, and a team member will reach out to you to kind of go over a few things that we can help you with in planning effectively for any aspect of your finances, including preparing for your taxes and tax filing. At the end of the day, it's all about effective, comprehensive planning. There are so many pieces of our lives that may be impacted by different aspects. So whether you're in business for yourself, whether you work for somebody, whether you have a family, maybe you have kids, you want to plan for their college, maybe you want to have an idea of how you protect yourself with some insurance programs, some products and services, or you're looking for some investment of opportunities to be able to invest. There we provide all these services. Everyone has opportunity to talk to us, for us to customize a solution that meets your goal, helps you to reach your objective, allows you to be informed, well educated. Again, our primary goal is to provide education, the content, the information that all of us can use in our planning process. Because the more we plan, the more we know, the more we prepare, the well we shall be in the place of enjoying the wealth that we all desire. It's been a pleasure to share with you today on our broadcast, Financial Breakthrough Academy, talking about how to prepare for the tax filing season. I trust you got a few nuggets, and again, welcome to reach out to us, and we'll be able to have a conversation about any subject that is of interest to you concerning your finances. We'll be back very soon, and look forward to talking to you again. Thanks.